Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 18.26% year to date. We are beating the returns of the S&P 500 buy and hold investor by approximately 2 percentage points, which is our whole goal here at SPY Trader Now. Our stock market strength color signal is green. Last week, the S&P 500 had an unbelievable gain of 4%. Just incredible gains. We do have this negative divergence from the MACD from here to here and here to here. So that's one thing that we want to be cognizant about. And we still haven't come up to surpass this line here. So we want to keep an eye on that as well. Last week we did make 3 trades. So on August 15th, what we ended up doing was we sold to close 2 of our long calls. So that we did that, and we also, a couple hours later in the day, this is Pacific Standard Time, then we sold 1 in the money covered call. And here's a little bit of the what those calls look like that I sold to close. Now here are all the trades that we've made in calendar year 2024. If you want to see all my trades going back for the last 3 years, you can head over to this link. It will be down in the description down below. Now, we do have 2 open positions highlighted in yellow. We are currently holding 200 shares of SPY, and we are profitable in that position by 13.65%, which is a little over $13,000. Now, I also have sold an in the money covered call, and that's just a couple days old. We're 2 days into that trade. We're negative or upside down on that trade by $124, and that is going to give us protection because that has a strike of 495. Current market is trading at 554, so at least 100 shares, because this is just one contract, okay, 100 shares. So 100 shares of the 200 shares that I have are currently protected to the downside by about, 10 percentage points. So, and then the other 100 shares are just free to go up and down as the market goes up and down. But at least we have some level of downside protection right now. If you want to see how I trade this portfolio, go ahead and smash that like button down, subscribe to my channel, and ring that bell to be notified when I post a new video. Now, we compare our model portfolio in blue against the benchmark, which is the S&P 500 buy and hold investor in pink. And you can see how last week both portfolios shot straight up. But because I had 2 calls, that also helped my position get a little bit stronger than the angle of ascent than the buy and hold investor. But the most important part is that right now I am beating the buy and hold investor by about 2 percentage points, and compared to where the buy and hold investor had an all-time high for the year, I have also surpassed that high. So a couple of bonus points for me there. Also, the angle of ascent on my equity curve is better than the equity curve gyrations of the buy and hold investor, with 2 pretty good corrections so far in calendar year 2024. Now we are looking at a 6-month chart for the spiders candlesticks, and we have a Fibonacci retracement here where we can see that the 61.8, now you can't see the 78.6, but it's, if you can imagine, it's right about this level. You'll see it in another chart. And we are now right at the 78.6 Fibonacci. The MACD and the slow stope are heading north and in positive territory. It's just that we came and did an 8% bounce from this low to where we're at right now. That's an 8 percentage points over 2 weeks, which is a lot for the market, and it's just going to take time to absorb that move. Here we're looking at a ratio chart of the NASDAQ 100 to the S&P 500. The ratio chart is the chart that is in red and black. In dark blue is the S&P 500. The ratio chart bottomed and went north, but now appears to have hit a little bit of resistance at this line. This line has been significant before in the chart, here at this level, here at this level here, and just about there at that level. So it's possible that we may bounce down from here. We have to kind of wait and see here. The MACD is not showing that. The MACD is showing that this is going to overcome this and go on and go north, but it's a little unclear. On the slow stochastics, you can see the angle of ascent has changed, and it looks like it's getting ready to cross below its signal line, showing you that a little bit of a pullback is in order. Considering the move that the S&P 500 just experienced, that would not be out of character for it to come back a little bit before it regained its footing and then it could advance. Now we're looking at the VIX Volatility Fear Index, and here we are at the level of 14.8, which is in the ultra low range. Below this green line, we are in the ultra low bullish range, which is bullish. And you're still bullish even if you're in the low range. So, but considering how far that we've dropped here, and look at the slow stochastics, how it's starting to curl, it looks like it's going to get a little bit of a bounce, which when the fear index, the VIX, when that bounces up, the dark blue S&P 500, that's going to come down. So it looks like a little bit of a dip is in store over the next couple of weeks. Now we're looking at a seasonality chart or information. For the month of August, going back 5 years on the spiders, there is a 40% chance that you're going to close higher than when you opened, meaning there's a 60% chance you're going to close lower. Currently, for the month of August, the S&P 500 is up 0.64%. There's 2 more trading weeks left in this month. You have a 60% probability you're going to close lower. So we may bounce around, we may come up and then come down. It's really a little unclear. We may come down and then come back up and then still be negative, but we should be dancing around. But there's a little bit of a downward bias according to the seasonality going back 5 years. Okay, right now we are looking at a 3-year weekly chart for the S&P 500. And here I also have cycle brackets down here at the bottom. And these would be the major and these would be the minor cycle brackets. Now you can see a clear cycle happening with a low here, coming up, coming up, coming up, and then coming into a low here, coinciding with this cycle from here to here. Now on this cycle going this way, you can see that we came up and we clearly came down right there. And that doesn't quite, that might be a little bit early, or it may be a little bit of a shakeout unless this starts to tank and then come down to coincide with this cycle bracket here. It's a little unclear exactly how that's going to play out. But we do know that that's a low, and right there is an absolute low. And right now you're in some type of a rising phase. Now, what I did is I took a Fibonacci based off of this high right there and based off of that low right there. And then we're measuring to see how much of this advancement we're going to get. Right there is the 78.6 fib. And you can see that we right now are exactly at that. By the way, this red is my target zone, which we absolutely hit the top end of the target zone. This is a valid trend line, taking into account that cycle low and that cycle low, and then just drawing a straight line that way. Now, we are right dancing just above this valid trend line right there. We are dancing just above it right there. That gives you some evidence that you're going to continue to go north, but that's not a guarantee. So we want to see exactly what it's going to happen over the next few days to week. Now, this is the old high for the S&P 500. This is where we are at right now. Well, that is only 2 percentage points, 2%, which is not much. So considering that we only have 2 percentage points off of the old highs, there's not much to be in this market if we're going to start breaking out and making new highs. Are we going to actually do that? Is this market actually strong enough to do that? I don't know. That's a little bit of a stretch. And that's why I wanted to have a little bit of downside protection. That's why I did the in the money call. Now let's go over and look at a daily, 1 year daily, switch our cycle brackets to the 1 year daily. And now let's just open that up and kind of get a nice picture to see what's going to happen here. On this one here, you can also see that we have absolutely hit the target zone in red. We are at the 78.6 fib, right at it. I've got a couple different valid trend lines. One valid trend line takes into consideration the cycle low that's down here a little bit out of your vision, and this cycle low, and then that comes over, and that's this valid trend line right there. I'm going to put a line right on that. Another line takes this low here and this low here. That's this valid trend line, the one that's slightly higher. So you've got a couple of valid trend lines, the lower one and the higher one. Right now we blew past the lower one, and now we are sitting just underneath the higher one right there. So we want to see if we're going to get a bounce and come down off of that, or if we're going to be breaking through. Now, these cycle brackets are not 100%, but this kind of lines up with that one. This one doesn't really, it kind of lines up with that one. This one lining up with that one. This one lining up with that one. This one doesn't really line up. Maybe that one right there. But in any regards, take these cycle brackets with a grain of salt. We do know for absolute that we did have a low here and we did have a low there. The market came up, came down, and went all the way to here. So this low that was established right there was taken out at this juncture right there. So that is a cycle breakdown when you do that. This is a positive cycle because you had a low here and then you had a higher low here. Here you have a low, but then you have a lower low. So that is going to not be a positive cycle. That one, like this one right here, where you had a low either here or there, and then you had a lower low. But what happened? When the market decided to go north, it broke out here, right there, and it took out that high. Well, when it did that, that dip right there was the dip to buy to go long. That's what we're looking for. Now, for this to happen, you're going to have to take out this high right there. We're 2 percentage points away from that. If this was to come out, break out, come down just a little bit, and then have a dip and then head north, then that is your buy point right there, if that were to happen. We're going to watch this to see how this is going to play out, because for all we know, this is just going to go down and take out this old low. But right now we do have some downside protection, as I explained. So we absolutely have some downside protection working in our favor. Okay, here is a ratio chart that I developed in an effort to determine the strength of different or various asset classes and also the 11 sectors of the S&P 500. And we want to compare ourselves from last week, this number 46, to this week 76. So you can see that various asset classes got stronger over the last week. Also, we were yellow, now we are green. Last week, the 11 sectors was at 68. This week, we are 83. So you are in a solid green here, and you're gaining strength. And the more green that you see, which is all fives and sixes, the more green, the healthier the market is. So as far as the 11 sectors, only 2 sectors are not in green, showing you there is strength in this market. So with this information, it's telling you want to kind of be long. I'm hedging my bets with one in the money call, but I don't want to be too bullish. We just came up 8.8% in the last 2 weeks. That's a whole year's worth of gains in the last 2 weeks. Now we are looking at a chart for the 1 year chart of the 10-year bond yields. What is happening here? We are currently at 38.92 right there. And the market can live with this level. The market is the S&P 500 in blue, and TLT is 20-year bonds in black. So last week you can see that the S&P 500 came up, bonds also came up, TLT, and the yields are kind of moving sideways here at this level, kind of bouncing around a little bit, but the market is okay with this thus far. So the market is okay and can move forward and advance at this level. That is going to wrap up this shortened intra-month video. And I gave you guys a ton of information. Now comes the critical thinking. What are you going to do with that information? Well, as of August 17th, 2024, the market summation, according to me, Ken, your friendly host for SPY Trader Now, the market gained 8.82% in 2 weeks is a lot of gains, and the market needs time to digest that move. We were on the right side of the market, as you can see from my equity curve when I showed you that on how well our model portfolio is doing. But I did lose some money on one long call because I did enter that trade too early. But that's just part of trading. You know, not everything's going to be perfect. I am only holding one in the money covered call to allow some downside protection, which I explained to you in this presentation. So basically, that is the video. I'm going to hold my positions for right now. We're going to watch the market and see what it does over the next week or two. And then depending upon what action we see will determine our next steps. But right now, I can do okay if the market goes up. I have 100 shares naked. And if the market does start to go down, at least I have 100 shares protected by that in the money covered call. So that's it. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, and ring that bell. I thank you and wish you good trading.